A very good morning to everyone. I hope everyone had a great evening and ready to kick off Thursday. This is Doug Campbell with Right Way Options and your morning market preparation video for September 21st, 2017. Well. Yesterday I mentioned or suggested that we could possibly see some real choppy price action ahead of the announcement, and then when the FOMC announces, we could see some violent moves. But I got to tell you, I was even surprised by how violent these moves were yesterday. If we look at a short-term chart, you can see we really did have kind of that choppy back and forth price action, and then we got this ugly, really nasty whipsaw that occurred intraday. Possibly shaking out quite a few people and then responding right back. Kind of one of those brutal days that you got to be careful of and watchful of. Now, the Bulls certainly showed tremendous strength yesterday, rallying all the way back, but there's always a little concern here when we leave behind after a seventh straight day of records on the diamonds and 9 straight days up. I'm a little bit concerned with this candle pattern, and only a little bit concerned. This candle pattern would be defined as a hanging man pattern. Hanging man pattern is typically bearish. We are definitely in the upswing, so the placement of this pattern is correct. But it will only be a bearish signal if we get follow through to the downside. Okay, a bearish pattern must have some follow through to the downside. If we don't get follow through to the downside, then it's just another wild day in the market. You got nothing to worry about. So right now, futures are showing just slightly lower this morning. Barely. I wouldn't even go as far as to say we're flat. We're not going anywhere here at the moment. But let's keep in mind how far stretched we are here in the diamonds. Now, here's my other concern. You can see that the diamonds is lifted out there a long ways. It's way ahead of its 50-day moving average. It's way ahead of support. The 50-day moving average, these guys have a lot of work just to catch up. So taking that into account, let's take a look at the SPY. Now, on the other hand here, the SPY has really been locked in a range. Yesterday's price action, although bullish, left behind what's called a dragonfly doji. Dragonfly dojis at a topping pattern are also considered to be bearish if there's follow through the following day. So if we were to have a black day or a down day occur here, that would certainly be, a little fuel or worry for concern. Right now, not so much. And even though we're showing just a little bit lower at the morning open, there's really nothing here to be concerned about as of yet. But definitely something to be watchful of. Here again, we take a look at the moving averages. And we're in better shape here on the SPY because the SPY has been resting in this area, consolidating, and the moving averages are trying to catch up. So a little bit better shape than we are in the diamonds. The diamonds itself, I think, are very overextended, and it's actually very dangerous to be chasing diamonds trades right now just by virtue of the weight that it is trying to carry. Let's go ahead and take a look at the Qs. Now, the Qs really showed us some concern yesterday, actually dropping through our trend. And if we take a look at the moving averages, we came really close to testing some critical support levels intraday yesterday. Now, this again is technically a hanging man pattern, but that hanging man pattern is not at a price high. It's in a consolidation, so it carries less weight, and once again would require some follow through to the downside for us to get majorly concerned about it. We do have futures suggesting this will open just a teeny tiny bit lower this morning, but no reason for some major concern here right now. Now, the IWM has just made an impressive comeback. I mean, truly impressive comeback. Now that we're up here, it's going to be interesting to see how this deals with this resistance high. Can we get through it? Or will we show a double top failure here? I think the odds are in favor of it breaking through. But I also think after such a strong rally, a rest or a pullback could be in the mix, in the cards. You know, a consolidation across here, something to build a little more energy could be there. So watch this close. Any pullback in here I would view as a positive, a place to potentially enter for the chance of breaking through to new highs. If we consolidate up here, all the better. That just shows tremendous strength. Now remember, we can pop through here and consolidate that as well, or pull back to here to test. That's just as good. So watch that closely. But IWM's made an impressive comeback, and I may be looking for a trade to hold IWM possibly in through the end of the year if it does pull back and give us a little rest. Let's take a quick look at the VIX here. This is a major concern for me now. Here we are. We're really now very, very close to historic lows in the VIX. There's no fear here, which means tremendous complacency, particularly in the face of, you know, the uncertainty of North Korea and now the Iran thing. President talking about breaking or pulling that deal off the table. So be very watchful. Just be careful. Make sure you have an exit plan. Trade long as the market stays long and trends stay up. But be watchful just in case. Be prepared, okay? Be prepared. That's all I'm trying to say. Watch what you're doing. Now, if we do a real quick look at that T21. Whoa. There we go. T21.22. You can see we are clear up here at this bearish reversal zone. It's a place where we would expect, you know, some kind of a rest or a pullback. And you can see this indicator is actually pretty darn reliable. When we get up here in these ranges, we tend to pull back. When we're down below here, we tend to rally. So it's a fairly reliable indicator on market direction, just when we're a little bit overcooked and when we're a little bit oversold. It just gives us some clues. And right now we're up here at this zone where you have to be just a little bit concerned that we might be the market might be a little too hot. So be careful and be watchful of that. Great charts to look at. I mean, there are really good charts to look at. What I would caution you against is chasing into this market. Look for good trades in the Qs and the spiders. If they start to participate, meaning that one of them, if they begin to break out and participate in this diamonds move, that would be awesome. And there are probably some really, really good trades in those two indexes. I'd be really careful about chasing anything in the diamonds right now. And just based on what we see here, just let it rest. Give it some time before you jump into anything there. So on the economic calendar today, we have just a couple things of major concern. First, weekly jobless claims. They're expecting the weekly jobless claims to continue moving higher due to the hurricane activity that we've had here in the United States. So watch that closely. If it jumps higher, they're expecting about 303,000 in the claims. If that were to jump significantly above that, that would affect the market. And then we got the Philly Fed Business Outlook Survey. Now that's been extremely strong all year long. I mean, tremendously strong. And they're looking for just a slight pullback in that today. We've got housing index and leading indicators. Those are really not market moving type events. And everything else is just pretty much white noise, bond announcements and bond auctions and that kind of stuff. After the close, we have money supply and the Fed balance sheet, but I wouldn't expect them to create any market damage at all. Other than that, on the earnings calendar today, we have over 20 companies reporting earnings. But looking through that list, I don't see anything of significance or anything that would be potentially market moving. Just make sure to check if you happen to own one of those companies. That could be devastating to your account if you're holding a company and don't have a plan to deal with that in any kind of a earnings event. So make sure you're checking that. So, hey folks, if this is the first time you've seen this information, I do produce this every single day. And please, I would love to have you click that subscribe button and follow me button on Facebook if I can ever get my Facebook back. I don't know what's going on there. It seems to be a mess. And unfortunately, there's nobody at Facebook that you can contact. Or actually contact. You can send an email and they say, thanks for the input, but they also say we won't respond to this email. So I don't know what will happen there. But for now, please do me a favor and click that subscribe button on YouTube if you want to keep up with this information. And also, please feel free to, I'd love to see those thumbs up buttons clicked and a few comments on these videos as well. Everyone, have an awesome day. I want to wish you all great profits, and I will talk to you all very soon. Take care now.